Hey everyone, this is Taylor. I am doing the nightly video for April 16th. 'Twas another down day in the market, and you got the QQQ down about 3%, S&P's down 2.2%. The old Nvidia down 7%, Tesla down 5%, Apple down, we'll call it 4%. Microsoft down 3.5%, TSM down 3.5%, Google down 2%, and Netflix down 1.5%. So as you would expect, that brings with it a lot of sell signals. And then for tomorrow, we're looking at Amazon with a daily 2-hour, 1-hour, 30-minute, 15-minute sell signal. Meta has a daily 4-hour, 2-hour, 1-hour, 30-minute, 15-minute. Couple down here for Google, couple here for Tesla, Nvidia, Microsoft, and Netflix. The only one trying to print a buy signal on the 2-hour chart. So kudos to Netflix. But looking at the pattern they're playing out here on the daily time frame, really classic, reversion to the mean, mastering the trade kind of stuff. Flush away from the falling 21 EMA, rally back to it, big rejection. Flush away from it, rally back to it, big rejection. I think the day we go to bed and the S&Ps have gotten their second close back above that daily 21, that point they bought themselves some breathing room. They can work on a path, maybe back into a falling 50. So I do think at some point there should be a bigger reversal, but under a 21 EMA with a bunch of sell signals, in my book it'd be an easier short. So one thing I would like to look for here, in terms of risk reward and bang for our buck, might require a little bit of a pop. But I'm thinking if we can catch a decent bounce tomorrow, maybe going about 30 days out to expiration and looking for a 5,500 call credit spread. Again, I'm not trying to risk, 4 to make 1. If I can risk 2 to make 1, we could probably work with that. Catch it on a pop, 5,500 call credit spread, and I think it makes for an easy short to manage. If they pop it, they rip it, they get back through that 21 EMA. I think you got to cover the short and probably think about a few longs. They keep it under 55, they might dump it lower, they might give you a gentleman's pullback. Gradual walk down, they might chop it. If they can keep the price under that falling 21, it'll be a premium paycheck. So we'll think about that for tomorrow, and then, a lot of the same pattern taking place in a lot of the important names. QQQ. Right, same bearish song and dance. You flush it, you pop it, rejection. You dump it, pop it, rejection. Again, give me 2 good closes back above 465, 470. I think you got a QQQ you can buy for a short-term long. Why can't I buy it right now? If I show you the inverse QQQ, we go flipping that frown upside down. Right, minus QQQ on the inverse, I could only be a buyer. Not my opinion, not my bias, just what the indicator says. 13 points out of 15, bull trend, bull structure, bull momentum above a rising 21. I would never get swing short that. I'd be looking for a 15-minute buy trigger, 5-minute, 30-minute, catch it on the 15-minute squeeze, hourly squeeze. I want to play that in the direction of the pretty colors. All right, what about an inverse chart for Apple? Would I short the inverse chart of Apple? So minus AAPL, and no, I never short that. When could I short it? Give me a good flush. Give me a couple of closes back below that 21 EMA. Give me a 30-minute, 1-hour sell signal. Then I can play for a short-term, flush down to a 50 SMA. If I wouldn't short the inverse chart, I can't buy the real chart. So here's the real McCoy. Got a negative 13, bear trend, bear structure, bear momentum. They flush it, they pop it, reject it, they dump it, they pop it, rejection. It's classic reversion to the mean in the context of a daily downtrend. Within that, you can find some good longs. Those are going to be on your 5-minute squeezes, 15-minute, 30-minute, playing the push back to that 21 EMA. You get back up there, a little patience, be a little bit careful. And again, I think you get that 2-close rule. Might be a shot for better prices in Apple. Under that falling 21. Could be more of a rotten apple. So as far as I'm seeing it, we're caught in a daily downtrend dynamic. Till that changes, I'm thinking we're looking for shorts. I'm leaning towards call credit spreads. And then what could we buy? I think it's only gold for now. And gold's been really good to us here in the rooms. Now, a little food for thought. It won't matter until it matters. It's a little bit overbought. By most standards, overbought on a daily time frame, overbought on a weekly chart, a monthly chart. Maybe not a great moment in time to load the boat for a swing trade on gold. I do think a great day trading vehicle. So a couple of examples from last night. And I think we're like 9 for 9 in our room. Between the two rooms here, taking these lower time frame squeezes. So here's last night. Now you can laugh at me here in the comments. I bought it on the 5-minute squeeze signal back here. I got my white arrow, squeeze, perfect score of 15. I'm buying it back there. I'm taking profit right here. Felt like a decent trade under my belt, and then gold kept on golden. But those little moments in time on a 5-minute, a 15, a 30-minute, even on an overbought name like gold, it's for now one of the only spots of relative strength that I can find. So keep on giving me good-looking 5-minute, keep on giving me good-looking 30-minute, 1 hour. Something I think will keep on working in the room here. Let me show you guys a 30-minute. All right, wait for a squeeze, wait for a white arrow, get long, play the push. Just a beast of a move. Right, pull back, another 30-minute squeeze. Awesome stuff there for gold, and then not one I would buy right now, but I'll show you as maybe an idea for down the road. Out of the Big Ten names here, Netflix, Google, Broadcom, Meta, Apple, all the above. Netflix, I think, looks the best. Now, earnings are tomorrow night, and I think it's a little bit interesting that they have earnings tomorrow night, and the market is closed on Friday. Seems a little bit suspicious, if you ask me. But nonetheless, I think really solid weekly squeeze shaping up. And again, I'm not going to buy it tonight. I'm not going to buy it tomorrow, rather. I'm not going to short it. I'm looking at it thinking a little bit more. At some point this year, the weekly squeeze should fire. And we can kind of ballpark it, right? If they break it short, that could be a flush down to 700-ish. They break it long, that could be a push into 1100 and change. It does lean a little bit more bullish into earnings, 10 points out of 15. But yeah, one we'll keep on the board, keep in the rotation here in the videos, watch it all develop. But aside from that, guys, I think it's a great day trade market. It's a tough swing trade market. If you are looking for swings, it does seem like until we can get those two closes back above our QQQ S&P daily 21, it's an easier market to be swing short on pops back into resistance. So for tomorrow, we're looking at the S&Ps, and ideally on a pop, price out a couple of those 5,500 call credit spreads. And then until gold runs out of gas here, looking for 15-minute squeezes, 30-minute, taking them where we can get them. But all right, y'all, have a great night. Thank you for watching. Talk to you in the next one. Adios.
What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.